Hi, I'm Jimmy. In this video, we're going to look quickly at what's been happening with the Federal Reserve and what impact the Fed is having on the stock market. And then we're going to look at what we think could happen. What are the different scenarios as far as what the Fed may or may not do with the Fed funds rate? So the US Federal Reserve is meeting at the end of this month on the 30th and the 31st. So basically, here's what's happened. So back in June, the Fed chairman came out and he said that there is some uncertainty around trade tensions and concerns about strength in the global economy, or ultimately a lack of strength in the global economy. And because of that, the Fed is going to do what they feel is best for the overall economy. Then Wall Street got super excited about the possibility of the Federal Reserve lowering interest rates. And then the S&P 500, well, since then, they've been up almost 5%. Now, this may not sound like a lot, but it's been just about a month since that started. And if we were to annualize that, well, that's up closer to 50% on an annualized basis. My point is that this is a very big jump in a short amount of time just because the Fed said they might cut the rate. Now, since these rumors began, well, Wall Street's gotten gradually more excited that a Fed funds cut is actually going to happen. And I've seen a few different scenarios. The first one, the most extreme version of this, is that the Fed cuts interest rates by 50 basis points, which is the same as 0.5%. Scenario 2 is that they cut it by 25 basis points, which is the same as 0.25%. Another possibility is that we don't, in fact, get any rate cut at all, at least not during this meeting. Yes, Powell has hinted at the fact that we may get a rate cut, but he has not directly come out and said a rate cut will absolutely happen. So, under what situations could a rate cut not happen? Well, Powell has stated that one of his concerns is the concerns over trade tensions. And if the US were to somehow close trade deals before the end of this month, then perhaps no interest rate cut is actually what plays out. But at this point, if a rate cut doesn't happen, I think that the stock market is likely to not react too kindly to that. Now, what about a 0.25% rate cut? Well, I actually think that this is the way it's likely to play out. And some of that is going to depend on the data that comes out between now and the end of the month. We have some jobs data in addition to other things. I think personally, this is the safest pick. 0.25% is probably going to be the way it goes, in my opinion. Now, if the Fed does go with a 25 basis point cut, well, I think that the market is likely to be disappointed by this since there are so many people that believe a 50 basis point cut is likely to happen. So what if they do a 50 basis point cut? Well, if they do, then perhaps the market jumps a little bit. But frankly, I almost expect a pullback in any scenario. It's going back to the old Wall Street saying, buying the rumor and selling the news. Now, yes, I suppose that this would mean that I believe that the market is likely to have a pullback even if interest rate cuts start to happen. Now, this brings us to a quick look at some history of interest rate cuts. So this is the Fed funds rate going back to 1999. And as we can see back here, that line represents the high of the S&P 500. And as we can see, the Fed started lowering interest rates right after the S&P made a high and started to head lower. The Fed continued to drastically cut interest rates to try to get the economy back on track. Now, if we fast forward to the Great Recession, well, here, the Fed actually jumped the gun a little bit and started to cut rates right before the S&P 500 made its high. Now, we know that didn't work out too well since from the top to the bottom, the S&P 500 was down a bit over 50%. And this brings us to today. So let's imagine that the Fed does go ahead and cut rates. Well, each of the last rate cut cycles have been in reaction to or an attempted anticipation of serious economic problems. And I feel like for some reason, people seem to be forgetting that if the Fed is cutting rates, assuming that they do, well, this might be in reaction to some serious economic data, at least the data that they're looking at. To me, there doesn't seem to be any need to cut interest rates. I've heard some people say that this is politically motivated, and perhaps it is, but it seems somewhat unnecessary. This is a chart of the S&P 500 compared to the Fed funds rate. And as we could see, the whole time that the Fed funds rate was rising, well, the stock market is up more than 50% in that time period. So clearly, the market does not need falling rates in order for it to go up, unless the underlying economic data beneath everything is actually calling for more trouble. So in that scenario, it would make sense to lower rates. So what does all of this mean for our portfolios? Well, in a bunch of the videos that I've done that talk about this general topic, I've seen a bunch of people put comments in there. And basically what they say is that time in the market is better than timing the market. And I agree 100% with this. And I think it does make sense to watch the overall economy to help us determine which sectors we believe will do better than others. But yes, I think it makes sense to stay invested almost all the time. Now, I think it's going to be very interesting to see what happens with the Federal Reserve at the end of this month. Do they cut rates? Do they do no cut? How much do they cut? Now, I'm guessing a quarter-point rate cut is most likely, but what do you think? Do you think that the Fed funds rate is going to get cut? If so, how much are they going to cut it by? And then, what do you think is going to happen to the stock market from there? Now, I think that the market will likely have a pullback once the rumors turn into actual news, unless something unusual happens. But that doesn't mean for 1 second that I think it's smart for us to pull our money out of the market. I think that any pullback in the market is going to be temporary. Unless, of course, this is once again the Fed just jumping the gun on a weaker economy, sort of like they did back in the Great Recession. But what do you think? Let everyone know in the comments below. And if you're new to our channel, please hit the subscribe button and don't forget to hit the thumbs up. And thank you so much for sticking with me at the end of the video, and I'll see you in the next video. Thanks.